Do you know your credit score? For those living in the US, your credit score is one of the most important numbers you should know. It's similar to your social security number. Your credit score can literally affect all aspects of your life. In today's video, we will go over how your credit score is calculated, how to boost your credit score, and tips to avoid ruining your credit score. Let's go ahead and get started. Hey guys, welcome back to our channel. If you're new here, we're Elma, Jerwin, and Siopao. We're two Asians and a dog.
In our channel, we cover real estate investing, stock market investing, financial education, and our travels. So make sure you join us to 8/12/24, which is our FI date. And stay till the very end for Siopao's tip of the week.
So Jerwin, what's your credit score?
Like 1,000?
You know that's not possible, right?
Oh, my bad. I mean 100.
Okay, well that's too low.
So let's go over how your credit score is calculated first. To start, let's go over the smallest piece of the pie. 10% of your credit is based on new credit or credit inquiries, which essentially means how you apply or how often you apply or take in new credit. Applying for a line of credit such as a credit card, an auto loan can lower your score up to 30 points. Keyword there is up to. I've known people that apply for a credit card and only lowered their score by 5 points and others up to 30 points, depending on your credit history.
Another 10% of your credit score is based on the types of credit lines you have, such as having a credit card, a mortgage, or a car loan.
Okay, so now the pie gets a little bit larger. 15% of your credit is based on the length of your credit history. So this means don't close your oldest credit card. The only time we recommend closing your credit card is if the card has an annual fee. There are just way too many cards out there that give cashback points with no annual fee. Having a mortgage and making payments on that said mortgage for the next 20 plus years is also a great way to increase and maintain your credit history.
30% of your credit is based on the amount owed, which is credit being utilized. One example is having a credit card with a limit of $1,000. If you have a balance of $900, that's not ideal since the credit card company will think that you have a higher chance of defaulting, meaning not making the payment. They say ideally your balance should not exceed 30% of your available credit limit. This also means that having some debt is actually good for your credit score. It shows your ability to take on debt and pay it off. Your payment history makes up 35% of your credit score. This is the most important piece of your credit profile. So making your monthly payments on a timely manner is very crucial. Paying your mortgage, your auto loan, and of course, if you have any credit card debt on time is literally the best way to increase your credit score. On the flip side, having a late payment can lower your score by 35 points or more. Make sure you never ever have a late payment.
Now that we know how our credit is calculated, let's go over what having a high score means. Having a high score means you are deemed a responsible borrower by the lenders and the banks. These lenders and banks are the ones that gives us the money so we can afford the lifestyle that we think we need. Having a high score shows them a clear picture of your credit worthiness. It paints them a picture of you being financially responsible. It lets the credit card god knows that you have been responsible in the past. Then more than likely you can be trusted and you are more than likely to pay them back, which basically means it's a lower risk for a lender to loan you money.
Having excellent credit helps you get lower interest rate when buying a car, an RV, buying a house, and applying for a credit card. Getting a mortgage at 3% interest instead of 5% is a huge difference on your monthly payment. Most people with excellent credit can probably get an auto loan at 1%. Now imagine having bad credit and having that same car at 8% interest rate for the next 60 months. Having excellent credit not only helps you borrow money, but it also helps you lease an apartment or a home to live in. Most property managers will pull your credit to verify that you pay your bills on time. If your credit score doesn't meet the property manager standards, they can quickly deny you or ask for a higher deposit as collateral.
If you have plans on purchasing a home, one of the hurdles some buyers face is qualifying for that home. Lenders evaluate you based on your credit. And yes, there are other factors, but the first hurdle is having a high credit score. The higher your score, the lower the risk, which means they will feel more comfortable lending you hundreds of thousands of dollars to purchase a home. I mean, honestly, you can't expect a bank to lend you so much money if there's a risk that you won't pay them back.
What does having a bad credit score do to you? A credit score can range from 300 to 850. Having a poor credit score below 500, for example, can affect your financials in so many ways. Having a lower score means your interest rate is higher on just about any loan you apply for. That's even if you get an approval in the first place. For example, many of the loan programs available when purchasing a home have credit score requirements, usually in the 560 range. If your score is lower than that, good luck getting a normal government-backed loan. I'm not saying that you will get 100% denied, but it's going to be a struggle.
I think we're all familiar on how having a low score can increase our interest rates and potentially get denied on any loans. But did you know it can also hinder you from getting a job or even a promotion? Did you know most management positions actually pull your credit score? One example of this is when I was at J. Crew 8, 9, maybe 10 years ago. One of my coworkers applied to become a manager. She was about 2 years removed from a short sale she did on her house, and doing a short sale completely destroyed her credit. She was 100% qualified for the position and was already doing a job as a manager. But when they pulled her credit, they wouldn't approve her promotion. Being a manager, you have to handle and manage the financials of that business. And I guess that company thought that if you can't handle your own finances, what makes you think you can handle theirs? I've also seen several of my past coworkers get declined for job promotions while working at the bank. I mean, it does make sense. The big bosses wants to know that you are financially responsible to give financial advice. But FYI, this doesn't mean all bankers are good with their money, because they are definitely not.
By the way, if you guys are enjoying this video so far, make sure to hit that like button for us. It helps our channel grow and reach more people. Also, subscribe if you haven't already, and don't forget to stay to the end for Siopao's tip of the week. Okay, so let's talk about how you can boost your credit score faster and what you need to avoid. Did you know once a year you can go on annualcreditreport.com to view your credit report? Now, it doesn't give you your credit score, but you can view your entire report for free. If you see that it requires you to buy it, you're on the wrong site. This is 100% free. Again, if you want your actual score, you'll have to pay for that portion. Checking your credit report at least once a year will allow you to stay on top of it and hopefully identify any discrepancies quickly. Fraud is happening more frequently, so we highly recommend doing this.
Another way to get your credit report is when you apply for credit lines, such as applying for an auto loan, RV, or a mortgage loan. The company you use is required to provide you a copy of your credit report. You just have to ask for it. For us, we typically get our credit pulled every few months. So whether it's for a mortgage or an RV, every time it gets pulled, we request a copy of it so we can double check everything that's on there. Avoid late payments. Let me repeat that again. Avoid late payments. This is a common mistake that can easily and quickly ruin your credit score. If you remember from earlier, we said a late payment can hurt your score up to 35 points. And it stays in your credit report for 7 years. Now imagine being late on 2 credit cards, and so your score was 700. Well, after those 2 late payments, your score could be in the low 600s. So for the 3rd time, avoid late payments. It's so easy to set up auto payments on your credit cards or auto loans that I would just at least set an auto payment to pay the minimum once a month. So if you're traveling or just plain forget, it will at least make that payment for you. We personally make a payment on our credit cards every 3 days. Yes, every 3 days. Our credit cards allows us to make a payment every 2 days. By doing this, we are paying off our credit card balances immediately. Now, we're not sure if this does anything to our credit score, but let's just say you make a payment on your credit card once a month. That's 12 payments a year, right? Well, for us, let's round our payments to once a week, which is 52 weeks in a year. Since 35% of your credit is based on your payment history, now instead of only 12 payments reflecting on your credit report, for us, it will show 52 payments. Again, we don't personally know if this does anything in regards to boosting our credit. But what we do know that it doesn't hurt it. And by doing this, we will always keep our balances low and we never have to pay interest. And remember, maintaining a low balance on your credit card is essential when boosting your credit score.
Next, you'll want to reduce your debt. It's easier said than done, but if you really look at your financials, oftentimes there's always something you can cut back on or go completely without. By reducing your overall expenses, you will be able to pay down your debt much quicker.
Tying this to what Elma said, Pay off your debts. A lot of people think doing a balance transfer is a way to pay off debt. Don't get me wrong, balance transfers can be a great tool. However, balance transfer should just be buying you time until you actually pay off your credit card balances. You don't want to constantly be shuffling around your debts. Make small sacrifices today and slowly chip away at it. Don't open a credit card because it looks cool or because it's fancy. You know that quote, people buy things to impress people we don't know? Well, same concept here. There's absolutely no reason to open a new fancy credit card so you can just show it off. Also, don't open a lot of new lines too quickly. Not only will it ding your score every time, but opening credit lines so quickly means your score won't have time to bounce back before being dinged again.
Another way to boost your credit score quickly is by having someone with an excellent credit add you as an authorized user on their credit card. And you don't even need to get a card if that person doesn't want to give you one. Being added to someone's credit essentially means you are piggybacking off of their credit. Currently, only Capital One, Discover, Bank of America, and Wells Fargo are transferring past history. Also, make sure that the person adding you has no late payments or high balances on their own credit cards. Be very careful if you decide to use this strategy. When you're piggybacking off someone's credit, keep in mind you're also piggybacking when their credit goes down. You can try this by asking your significant other, family members, or even close friends. We've actually done this a few times for family members. Again, we never handed them a credit card. The purpose was to boost their credit score.
If you're having financial troubles, don't run away. Reach out to your borrowers and try to work out an agreement. Ignoring the situation won't make it go away. We know sometimes we feel overwhelmed, like we dug ourselves a big hole we can't climb out of. You have to face it head on. Like we said earlier, be consistent and chip away at it. It's never too late to get started.
That's everything we have for you guys today. If you enjoyed watching this video, please don't forget to hit that thumbs up button and subscribe to see more videos on personal finance, real estate, and stock market investing. Now it's time for Siopao Tip of the Week.
Siopao's Tip of the Week. Be aware that paying off a collection account will not remove it from your credit report. It will stay on there for at least 7 years.